Well, welcome to the conversation with Monica and Lynette. And Monica, what did you want to talk about today?
Today, let's talk about the housing market.
Okay. Okay.
So, the housing market last month in September saw the lowest sales that it has seen in over 14 years. So, what's going on in that? Why are people not able to afford homes?
Well, it might have a little something to do with how high the prices of homes are and how scarce they are. If somebody has to move, they might not want to give up that low interest, but they may be forced to if they have to move someplace else. So there are a number of factors that are going into this, but let's face it, it was back in 2008 when the housing market was imploding from its own weight.
Right.
And then the central banks came out and said, we've got to reflate it. And then what did they do in 2020, right? With all of that extra money, now
Right.
everybody is working from home, and they're trying to shift that back because look what happened with the commercial real estate market.
Right.
So overall, it's not really a big surprise that the real estate market is stalling.
Right.
I think it needs to drop substantially, though. It is severely overvalued and unaffordable for most people.
Yeah, absolutely. I mean, you hit the nail right on the head. The prices, rates, supply, those are all the challenges that we're seeing, and especially the younger American households that are having a really hard time breaking in.
Right.
But we did see a rate drop. So why aren't we seeing any benefit of come from that?
Well, even though we had an official rate drop, it doesn't really appear that the mortgage rates have dropped commensurate with that rate drop.
Right.
So it's not really having, and even a rate drop, I mean, that's really what helped push those prices up so much were the interest rates. But now that the interest rates, even if the rate drops, the housing price is so high,
Right.
and the rate relative that is also so
Right.
high.
Right.
So it really makes it unaffordable. And I think what's probably happening for those that are trying to break into the real estate market is they're realizing that American dream,
Yeah.
it's just not there because they've been saddled with so much debt.
Right.
Actually, who was I having? I was having an interesting conversation with somebody the other day. Was it you, Adam? And we were talking about when women in America could actually get their own credit card.
Oh my gosh, that was what? It was the 70s. Was
Right.
that right?
1974,
Yeah.
I think. And then
It's unbelievable.
you could, now, see, I was living through that. I don't think I tried to get a credit card on my own. But I did notice, too, that offers were coming through to college students.
Right.
Right?
Yes.
As time evolved,
Right.
then they were getting younger and younger people more attuned to taking on credit, right? And another term for credit is debt,
Absolutely.
because that's how money is created in this system,
Right.
right?
Yes.
It's no accident. There's lots of things that happened in the 70s, but yeah, the baby boomers were in our own, so we're not really selling. I don't ever intend to sell this house, to
Yeah.
be honest with you. And yeah, I think there is a revolution brewing because people, and this isn't just happening in the US, this is happening all over the world,
Right.
where the younger generations are realizing that what they've been taught to believe, what their opportunities are, the jobs that they could get, the lifestyle that they
Yeah.
could afford, they're recognizing that it's just a lie, that it's
Right.
not true anymore.
Right. And you go to college, you take on some debt potentially, and maybe you get out of college with a decent income, but you're also realizing like that's still not good enough even in this
Yes.
market. You 6 figures, you're still struggling. I mean, if you have a 2-income household and kids, it's still a challenge for a lot of households.
Well, what did they stimulate? Back in 2020, anybody making less than $250,000 a year
Right.
were stimulated.
Right.
Right? So what does that tell you?
Yeah, it tells you that even, at that income level, it's hard to afford living. It's hard to afford.
So that goes back to nominal confusion, which is one of the great things. I don't really mean this. I'm being facetious in here. But when they were setting up the system, what they knew was that not one man in a million understood inflation.
Right.
And so inflation causes nominal confusion. And that's why a family of 4 could live on $10,500 a year in 1971.
Right.
But they have to stimulate anybody making $250,000 a year or less.
Right.
Right? There's a complete disconnect.
Yeah. And then there's so much there, right? Like there's young individuals are delaying buying a house because they can't afford it. They're delaying having children. I mean, there's so many things that are being delayed because of affordability.
Exactly.
Which is a huge challenge. But and funny, going back to what you were saying about when women could get their first credit cards. I don't know if you know Ina Garten.
I do.
I am a huge fan. And
Me too. I love her.
I've been reading her book, and in her book, she talks about when she was going to apply to buy a house with her husband, she didn't exist because she didn't have any type of credit.
Exactly.
Yeah, and so she was very frustrated by that situation, which it just triggered that the book that I've been reading. But
well, actually, I can tell, and I don't know, this may not be relevant or anybody really care too much about it. But when I first had my babies, because after all, I had twins and I might have had a minute or two that I wasn't taking care of them. But I actually invented and produced, as a mock-up anyway, a T-shirt that the kids could color on, they could paint on, and then they could wear it. They would put it in the washer, the paint would get washed out, and they could redo it. And I actually even sold that to Disney World.
wow.
But I could not get the funding to produce it.
Oh no.
And then a couple years later, somebody else came out with it.
Wow.
But I didn't really think about it before, right? Because if I couldn't get the money together, I couldn't get the money together. What are you going to do?
Right.
But that was also during that period of time. That would have been 1981-ish, right? And that would have been during that period of time when things were still transitioning.
Right. And we're seeing a lot of challenges. I mean, particularly I think the housing market is one of those indicators. But overall, affordability has been a struggle for American households.
Right. Incomes do not keep pace.
Right. One of the reports that recently came out, I think it was Fannie Mae or Freddie Mac, and they were saying in order for us to get back to the affordability of like 2019, we would either have to see a significant decrease in interest rates, like somewhere around the 2%. We would have to see a drop in the price, which would take us back to the 09, type of dips that we saw. Or what was the third one? I think, maybe it was
And it was probably
supply.
Availability, supply.
Increase in supply. But the end result of that was they were like, we don't really see any of these things happening.
No.
So what?
Not at the moment.
Right.
Okay? Not at the moment. And I think that part of what we're going to see with the advent of the central banks dropping the interest rates so much is we're going to see a lot more inflation.
Right.
Right? And that also, mind you, they want you to think that that doesn't really have an impact on the GDP, that the GDP numbers that they put out are real, but a big chunk of them are all based upon that inflation.
Right.
So no, I think ultimately though, when you go into the hyperinflation, I've done a lot of studies on what happens to real estate during the transitions that we're in.
Right.
And so as unaffordable as it is right now, historically, 25 ounces of gold would buy you a city block, buildings and all.
Wow.
Right. So that is the point of sound money, because the money is worthless. So it's going up in terms of the fiat money, but it's not really going up as much in terms of gold.
Right.
When you take a look at the cost of a house back in 1971, and I haven't done this yet, but we can pull this table to put in there, the cost of a house in 1971 in terms of ounces of gold, and the cost of a house today also in ounces of gold. What gold does is it preserves your ability to purchase over time.
Right.
And when we go into hyperinflation to wipe out all that debt so we can restart into a new system, the price of all of those income producing assets or other assets, like there's no way that I would buy an investment property right now. That's a
Right.
joke. It's
Right.
way too overvalued. You got to have a place to live, so and make your last stand, so that can be different because it's not going to matter.
Right.
And if you've done it, part of the strategy that we use, the sound money strategy, is how to pay that mortgage off.
Right.
Right? So that kind of can wipe out the overvaluation,
Right.
right? Because you're repaying it with dollars that have no value. It's pretty standard sort of logical stuff. But it puts you in even a better position for these income producing assets. We haven't seen what's really going to happen with commercial real estate
Right.
and how that's going to roll into all of the areas of real estate.
Right.
That jury, we're still waiting to see what that happens, but I can tell you, if you're holding physical gold and silver, and particularly gold, real estate basically runs a few risks. Number one, taxes, property taxes. They call that immovable property because I can't take this house and put it on my back and walk away with it.
Right.
I can with gold. I can put it in my pocket and walk away with it, right? But I can't with a house. So during these periods, we're also going to most likely see quite a spike in insurance or in property taxes, also insurance, but property taxes. And you could have your home completely paid off. If you don't pay your property taxes, you lose that property.
Right.
So one of the things that we do in the strategy is ensure that you can always pay your property taxes no matter how high they go.
That's
Okay?
great.
The other part is the mortgage, right? Because if you get into trouble with your job, and what they will most likely do, history shows us that they're going to take the mortgages, and we in this country we're lucky because we can have a 30-year fixed rate mortgage. It doesn't mean that they can't modify those mortgage documents, but they can't do it right away. You have a block of time, and so first they will likely do something to trigger the interest rates keeping pace with inflation or something like that.
Right.
Ultimately, that means you're not going to be able to pay your mortgage,
Sure.
right? So part of the strategy eliminates your even having to deal with that because we can calculate out how much you would need right now to pay off that mortgage. By the time that happens, you might need a fraction of that. So when we do that very first overnight reset, even though historically we should have about a 9-month window before the gold also resets in terms of the currency, why wait?
Right.
And yes, they're going to do more resets. It's going to go even higher. But why put yourself in that position? It's not worth it. So you're going to find that as soon as we do that overnight revaluation, I'm going to be paying off my mortgage because frankly, that's the only reason why I have a mortgage is because I want to execute this strategy.
Right.
Right? So it's property taxes and it's the ability to pay off the mortgage and also maintain all of your other costs.
Right.
Right?
Right. And I love that you're saying that because it really is helpful for our audience that's thinking about, okay, how do I navigate this current scenario and any changes, right? And for that type of strategy, it sounds like it's beneficial for someone who is currently a homeowner. But what would you say to those people that are trying to break in and haven't had the chance?
Well, okay, first of all, for those that haven't had the chance to do it, what you want to do is you want to hold most of your wealth in an undervalued asset that is in a long-term positive trend.
Right.
Okay. Well, everything else has been targeted for reflation, stocks and bonds and real estate and all of these things.
Right.
So, we get FOMO because we've been trained that that's the only place to put your money.
Absolutely.
Right?
Absolutely. Yes.
But
I can relate to that.
you can relate to that. And you should probably talk about that on another video.
Yes.
and talk about your journey and how you're here,
Absolutely.
and so that the audience can grow
Yes.
with you as well. Gold and silver are severely undervalued. Even though they're making nominal highs,
Right.
they still do not reflect their true fundamental value, because a rising gold price is an indication of a failing currency.
Right.
So even at these levels, you accumulate, because history shows us that when this opportunity, and we'll see it, right? I show the patterns, I show the cup formations. We're going to know when we're in an accumulation pattern, but you're going to have the wealth that you need, not just to buy a home that you can live in, right? But to buy other income producing assets when they are severely undervalued.
Absolutely.
Right? Right now they're severely overvalued.
Yes.
And we don't know who's going to survive that.
Right.
We don't know which corporations, because they can do so much stuff off balance sheet. We don't know which corporations are going to survive this debt wipeout.
Right.
Let them go away. We're going to see which ones do survive, but they're going to be a whole lot cheaper than they are right now. And if you hold your purchasing power, you're going to have something to convert into that.
Right.
Right?
Absolutely. Yeah.
It's,
And like you said, I mean, a lot of us are trained, myself included, to be heavy and all in the stock market, but it is so important to diversify. And a lot of the times you think diversification means diversifying in the stocks that you're buying, right? You're not just in healthcare, but you're also in technology sector. And that is one way to diversify.
Right.
But when we think about gold, and the reason why we're talking about gold is because when recessions happen, we see the stock market take a dip, but gold is that natural hedge against those dips. And when recessions happen, typically gold goes up. And so you're absolutely right. It is a great way to diversify and a great thing to have as part of your portfolio.
Right, absolutely. And when you're talking about diversification, some people also think stocks and bonds are also diversified.
Sure.
And let's face it, they have turned everything into a tradable financial asset. They've securitized your water, your air, I mean, everything, food, oil. We think that it's a supply and demand market because that's what we've been trained, but it's not. It is a trading market, and that means risk.
Absolutely.
And we have been forced out onto the risk spectrum if you need income for anything, and that's intentional. I mean, that's financial repression, right? Which is an official policy, and they've been actually executing it on a regular basis according to the International Monetary Fund. Don't hold me to this date, but I'm pretty sure it was like 1956 or something like that. I'd have to go back in and look. But for a very long time, and it's a form of manipulation. But diversification, all that stuff is intangible.
Sure.
Right? They're holding it. They're really the ones that own it.
Right.
They're really assets in-house, which was a very big thing when I was a new stockbroker in the 80s. You wanted to gather those assets in-house. Why? Because then the entities, those banks, those Wall Street firms were also owners of those assets.
Right.
Right? Beneficial owners that could use it and go out and trade and do whatever they want with it. Use your equity. So you've got to have not just intangibles in a portfolio, but you really have to have tangibles in a portfolio as well.
Absolutely. And I think, that's great. So to summarize that, right, diversification is important. Gold is a really great asset to include in your portfolio. It's a natural hedge against that inflation. It doesn't have that counterparty risk that we see with stocks and bonds, right? So it's very key. It's a very key asset to have in your portfolio. 100%. And the other thing I would say is really just, I think, practicing patience. Because as a younger individual, it's definitely something that you see you get the FOMO, like you said, right?
Right.
You see people buying the houses, and you also want one, and it's exciting. But it's definitely, I think, when you think about the money management principles, right? It's good to be patient and not buy something that you can't really afford.
Yes, that would make a whole lot of sense.
Right, because then when you get in that situation where you're spending more than you're earning, then you can't invest into things like gold, and you can't prepare for the future.
Right.
So that, I would say, that would be another thing that I would add, is just making sure that you're practicing that patience and don't get into a situation that is not going to be good for you in the long run.
Exactly. Or really even in the short run.
Yes.
And I'm really glad that you brought that up, because just recently there is a shift happening with the younger generation where they don't want to overspend. So they're going to more cash. Cash use is on the rise, which I'm super happy about. And not because that's not also being inflated away, but because it at least preserves your principal. It doesn't preserve your purchasing power, but it does preserve your principal, and we need to have choices.
Right.
And it's exciting for me because I am watching the younger generation on a global basis buying gold and silver. I mean, that's what having gold and silver at Walmart and Amazon and Costco, that's really what that's about, is the public is getting more involved and the younger generation is getting more involved. And so we had this huge block of younger generations, which I would have been in that one as a baby boomer, that were encouraged to take on more and more and more debt. But we're now seeing that shift.
Right.
And people want to have sound money. They want to have a plan. They're learning to have more patience because they're realizing the trouble that they're in with all of this debt, the student loan debt, the car debt, the credit card debt, the, buy now, pay later, right?
Absolutely. They're realizing they have to do something different because the system's not working for them. So they have to do something different.
Yep. And it isn't that this isn't kind of a pain for us at Zang Enterprise, but this is why we have a 1 ounce silver coin minimum. That's our minimum. Like what, $35, something like that? Because we really want everybody to be protected. That is critically important. And it's part of the sound money movement.
Right.
Right? Come together. Start to position some of that into sound money. There are all different ways in any kind of budget. And that's, and that's the beautiful thing. And, you and I were talking a little bit earlier, and you were noticing, and people know I'm a tangible gal, right? Gold, silver, I like my hard assets. It doesn't mean that I haven't had, I'm also an ex-stockbroker and banker. So it isn't that I haven't had those other kinds of intangible assets.
Right.
But there was a time, certainly, when I was first divorced and I was trying to figure out how to feed my babies, right? A single mom, they were 3 when I got divorced. And I had to sell things to get through that period of time.
Yes.
This was the conversation that we were having, right?
Yes.
And, I said, okay, on some of it, I broke even. Some of it, I made money. Some of it, I lost a little money. But there was a market for it.
Right.
That's the point.
Yes.
You also shared a story. You don't have to share it if you don't want to.
Oh, I don't mind. I don't mind. But yes, no. And I was telling you that I had a memory triggered from actually watching your other videos. And that was in 2008 when my father was in construction at the time. And so he had lost his job and we were struggling to make ends meet. And I remember my mother selling her gold jewelry to be able to make ends meet. And like I said, it was triggered watching your videos because it was my realization of like, wow, that's how it works when, that's how it comes into play in those situations that you have these tangible assets that you can liquidate to
where you've got a market,
right?
Period.
Right.
Right? I mean, it really is that simple.
Absolutely.
So, and we saw this actually with countries during 2020, right? Where these countries had accumulated gold and now the whole world had shut down and they had, gold is the savings. It's your savings, right? You think about people in India and how they wear their wealth because they have lived through, even recently, I think it was 2016, where they demonetized about, I think, 83 or 87% of the currency that was out there. But, and they also did a door-to-door gold confiscation. And some people want me to have told me that didn't happen, but that was an announcement from their Department of the Interior.
Wow.
So I kind of have a tendency to think that probably did happen since they said they were going door to door. They were allowing them to keep a certain amount and they were confiscating some. So we've got to be careful because desperate governments do desperate things. And, frankly, they've been confiscating your wealth since the day you were born. Go on the Fred, look at the purchasing power of the consumer dollar chart, put your birth date in there. And you'll see for yourself how much of your wealth they've confiscated since the day you were born. There are many that think, well, that won't happen because it doesn't back the currency again. But to a point that you made earlier, governments are accumulating gold at the highest level ever. I don't think it's because it's an old relic and doesn't have value. But they want to maintain their freedom. They want to maintain their power. Same reason that we need to be doing it too.
Absolutely. And as you said, we are seeing a shift, in the way younger generations are doing things because the system is not working for them. And overall, we are resilient. And if we come together in community, if we continue to have these conversations, we can learn from each other and work together to work through those challenging times and get through it together.
That's right. And come out the other side better than you were going into it. So I know that it's hard for the younger generation, but accumulate it because gold and silver in any form is monetary at its base. It has the most functionality, both of them, the physical metals, because it's used in every single sector of the global economy. I mean, it really is that simple. This is not rocket science. You've got something that has full demand. So there's always a market for it. Maybe it's more, maybe it's less, but there's always a market for it.
Absolutely.
And so, that's what, as a younger person, accumulate this. The opportunities will present. I promise you, the opportunities will absolutely present.
Great. Well, thank you so much, Lynette, for your insight. And I think that's really helpful to younger people, younger families that are, really struggling. But I think this gives them hope.
I hope so.
Yeah.
I mean, I seriously hope so because there is hope. I have a lot of hope. I don't consider myself a doom and gloomer at all. My sister-in-law might. And Ginny, if you're watching this, I'm talking about you. But, no, I have a lot of hope and a lot of hope because of what I'm seeing in the younger generation. That does, it gives me a lot of hope. And so I'm going to keep doing my part, and I'm very glad that you're here to do your part in it too. Because you have another perspective of it that I can't have because I've been doing it for so long. But you've got the chops, you've got the background, you understand this. So I'm really glad that you're here.
So am I, Lynette. Thank you.
So that's it for today. I hope that you got as much out of this conversation as I did. And send your questions in to questions@LynetteZang.com. And, we'll answer all of your questions. And we look forward to more and more great conversations to help you make educated choices that put your best interests first. And until next we meet, together, we can make a huge positive difference for the whole world. That's what we're here for, guys. Let's do it. And please be safe out there. Bye-bye.